Hi everyone, I'm Lindsay Shamel-Payne, and I'm a consultant here at Marquette Associates. I also work with a lot of clients on their sustainable investment approaches. Over the past few years, the conversation around sustainable investing has continued to gain traction and grow in substance. Looking at the numbers, 1 out of every $4 under management in the US is invested using ESG strategies. But what does that really mean? As interest in this space has grown, the terminology has become more abundant and at times confusing. The goal of this video is to tackle the terminology surrounding sustainable investing. To start, we use the overarching term sustainable investing to encompass 3 main categories: ESG integration, socially responsible investing, later referred to as SRI, and impact investing. We'll start with SRI. Under this framework, the investor's ethical values or mission drives the underlying investment decisions. Historically, this meant avoiding or screening out securities and sometimes entire sectors that run contrary to the investor's values. This focus on negative screening has since shifted to incorporate positive screening as well, to reward companies that are in alignment with the investor's ethical values. Taking this holistic approach can generate an additional layer of impact while also reducing portfolio tracking error, meaning the investments will deviate less from their underlying indices. We'll go through an example of this as it relates to fossil fuels. To start, we believe there is value in negatively screening out or divesting from coal and tar sands where corporate profit expectations are diminished. However, continuing to hold other carbon-intensive companies may actually move the needle in terms of climate risk, since many of these companies recognize the changes being demanded of their industry, both from a consumer and regulatory perspective, and are therefore making the necessary investments today in clean energy technology. These companies are also better equipped from a capital perspective to pave the way for smaller companies to adopt clean technology methods. Unlike SRI, ESG integration focuses on achieving more optimal investment returns by incorporating long-term sustainability factors into the investment thesis. This strategy does not utilize screening, but instead assigns rankings based on some form of an ESG scoring methodology, which typically applies materiality factors based on the securities sector. For example, a technology company's score around carbon emissions will not be as material as their score on data protection. The scoring is then incorporated into the investment analysis process like any other risk metric. While ESG investing does not include screening, the same concept can be applied to the scoring process. Holding a company with a poor ESG score provides investors with the ability to participate in active ownership through shareholder resolutions and proxy voting. This level of engagement has a direct impact on how the company decides to operate going forward and should ultimately improve the underlying shareholder value. Lastly, impact investing seeks a targeted, measurable impact alongside financial returns. The impact measurement component is critical and has been a hurdle for many investors, especially within the publicly held securities space. That's why we tend to see this strategy more often in the private market space, where there's greater leverage to target specific areas or issues and obtain the data needed to adequately report on the targeted impact. As this investing ideology continues to evolve, we've started to see the United Nations Sustainable Development Goals, known as the UN SDGs, emerge as the universal language from the investor, management, and company perspective, which has been helpful in better defining SRI, ESG, and impact targets. Lastly, it's worth noting that Marquette has been servicing clients in this space for over 20 years. We have a dedicated sustainable investing group comprised of members of our research and consulting teams tasked with sourcing and reviewing sustainability solutions that meet the unique needs of our clients. We're also available to answer any questions you may have about this topic. Thank you, and have a great day.